Hey everybody, Chris Englebert with Englebert Financial Advisers in beautiful Allentown, Pennsylvania. And guess what? It's December and we're going to be doing the first of the month update. What's on investors' mind? Well, you're going to see in a minute, I'm going to show you a chart of the S&P 500, and you're going to see that we had a big rally in November. The question is, are we going to get a Santa Claus rally? A Santa Claus rally is obviously a rally that continues in the stock market through the month of December. Now, one of the things that we try to keep our clients from doing is panicking. And if you've been watching our monthly update videos, and please share them with other people as well. We told you that at the end of October, we thought that things were going to turn around because we had 3 consecutive months down in a row, August, September, and October. And a lot of people were worried that we were going to have 4 consecutive months in a row. Our risk indicators were compressed enough that we did not think that was going to happen. And sure enough, we got a rip-roaring rally in November, up 8.6% on the S&P 500. But wait, there's more about this. So obviously this year, we've seen the Magnificent Seven, those 7 stocks, which don't know what the Magnificent Seven is, Google it. It's not a movie. It's those large cap tech stocks that have been leading the rally, with the NASDAQ 100 now up over 40% for the year. We've been seeing those stocks, some of them that are in the S&P 500, move the S&P 500 higher as well, while a lot of the other averages, for example, the Dow Jones Industrial Average, the Russell 2000, etc., did not participate. But this time it's different because in the month of November, the Dow Jones Industrial Average lit off and it's made a new high for the year so far. Now, let's give a little preview into 2024. So obviously it's December. Everybody's trying to figure out, what's going to happen in 2024. The word to remember, and you can use this at your Christmas party, is episodic volatility. Now, people hear me say that and they're, wow, episodic volatility. What does that mean? I'm like, that doesn't mean when your relatives are all around for Christmas. What episodic volatility means is that for 2024, we think there's going to be several large events that are going to make the markets, especially the equity markets, much more volatile than usual. So right now, our tactical account currently is hiding in cash. That doesn't mean you sell all your securities, but it's telling you that our risk indicators, although they were compressed at the end of October and they've improved, have not really gotten overvalued or undervalued. They're kind of in the middle of the road. But what we think is going to happen in 2024 is that there's going to be several big events. And obviously, we all know there's a presidential election in the fall. But being that there's already been actually 2 wars going on, we think that there's going to be more volatility in the markets next year, driven not by company earnings or changes in interest rates, but by outside forces. And so we believe you got to have a little cash on hand, because if the markets sell off, you got to be prepared to step up and buy, because we are in the camp of soft landing as far as the U.S. economy goes. Why do we think that? Let's take a look at the bond market. Not only did the stock market rally in November, but we've seen interest rates come down as well. The 10-year Treasury that peaked almost at 5% has been slowly drifting down as we get cooler inflation numbers. And also we're getting jobs numbers that are cooling off as well. But the jobs numbers, the rate that they're cooling off is actually a good sign, because rather than being white hot like they've been the last 2 years, we're beginning to see a more normal monthly jobs numbers, which we think is going to help with inflation. Now, we did not show this month a chart of the oil markets, and we will probably put that in for next month's update. But just to give you an idea, oil continues to trade lower. It's literally in the last 3 months down $15 a barrel. That means that gasoline in many parts of the country is going to be well under $3 a gallon, which again helps with inflation. But let's take a look at investor psychology the last couple of years. And everybody's saying to me, Chris, we can't figure out why the market rallied in 2023. And why do you think it's going to rally in 2024? Well, we get the University of Michigan consumer sentiment numbers, and the index has been below 75 for 28 consecutive months, tying a record from February of 2008. And so typically what that means is that when investors are extremely negative or bearish, guess what? The stock market goes higher and that's what's happened for 2023. And we think that leaks into 2024 as well, because people are still very negative on the U.S. economy and the U.S. stock market. The other thing that's going on out there is cash on the sidelines. If you see about the middle of the page from 2020, that is where obviously we had the COVID lockdowns, the economy being shut down, and you can see that cash peaked, it then dipped, and then it took off again. Investors are sitting on piles of cash. Now, one of the good things is before their cash was literally making 0%. Now on cash, you can get anywhere from 4.5% to as much as 5.25%. But we think going into 2024, there is a lot of fuel that could end up helping ignite a stock market rally at some point in 2024, which would be the least expected thing that many investors are thinking about at this particular time heading into the new year. So let's sum it up for you. November had a strong snapback rally on the upside for equities. We think it's going to turn into a Santa Claus rally. Number one reason is interest rates are coming lower. Now, be on the lookout. Everybody's been talking about, oh my gosh, you're seeing, mortgage rates at 8%. Nobody's going to buy a house. If interest rates continue to do what they're doing, you could easily see mortgage rates in the next 30 days under 7%. And we think that's a reality. And we think that's going to help the housing market in the long run. So the equity indices rallied for 2023. We think that they could continue for 2024. But the word of the day is episodic volatility, where there will be episodes with volatility next year, we think due to shocks from outside, as far as not fundamentals, but things like an election or something else happening. And we think that you have to have a little bit of cash on the sidelines, which obviously you're getting paid for now, to be able to take advantage of that. So that's all we have for December. We'll be back next week for January, and we'll be talking to you about the new year.